I had $500,000 in the super. 250 of that I put in as personal contribution.
Sold a house before.
Sold a house,
retired,
250. Mm-hmm. The other 250 came in through my employer. So half the situation in the super is taxed. The other is tax-free. If I die and my 20-year-old son or daughter, same situation, gets that 500 directly, they're not paying the 17% tax on the full 500, only on the amount that has been put into super via work contributions that's been taxed at 15%.
Correct, agreed. Hint to that is the more you've got in that tax-free column, the less tax your beneficiaries would pay.
How can one of these recontribution strategies help the overall tax position of the estate?
It's what's called a recontribution strategy. Back to that example, you said that 500,000 and 250 from work, 250 voluntarily. So can you within super just move from one column to the other? No, you can't. But if you do a process of transactions or a few different bank transfers, you actually can. And so what that looks like is you're 65, you retired. Can you access your super at that age? Yes. You're alive, so any money you take out over the age of 60 is tax-free to you. So if I take out, and I might just use an easier figure today, call it $300,000. If I take $300,000 out of my super fund, I'm taking that out tax-free. The day I do that, I'm not paying any tax, and it comes out to me tax-free. It comes from my super fund to my personal bank account. If I then decide the next day, you go, you know what, that's probably better actually in my super fund, I'm going to redeposit that into my super fund. And I'll talk about certain limits and rules and some errors to make. But if you redeposit that back into your super fund, when that comes into the super fund, it's coming in as new money. And they're saying, well, where did this money come from? Oh, it came from my money in the bank. It's only been there for a day, but it's from the bank. Okay, that's actually a tax-free contribution. We'll put that in your tax-free column. So effectively there, you're moving it from the taxable column to the tax-free column. Not within the fund, you can't just fill out a form, but a bank transfer out to yourself, a bank transfer back into the super fund.
So it has to be physically, it can't be a line item at the super fund?
It can't be exactly.
A paper entry or whatever?
Yeah, it can't be a paper entry or a journal entry or accounting entry. It has to be a physical movement of cash, and that moves it from one way to the other, and it moves it across permanently. It doesn't you don't have to do it again later, but there are certain limits on how much you could or should take out, and there's definitely limits on how much you can put back in. That's why we specialise in retirement, is that we can take action with people today and fix things next week or next month, and it's tangible. So it's powerful.
If you want to have a chat about your circumstances, feel free to reach out to us at Financial Edge Group to find out a bit more. Everyone's numbers are different, everyone's components are different, and your circumstances and family structure is different. So it's important to have a chat about this rather than rushing out and do anything. But it's also important to be proactive with this planning, and that's what we're here to help with.